So we absolutely have to go ahead and touch on Tesla stock as we have a couple of new updates that are pretty positive for the trajectory of the price action for Tesla that I want to absolutely share with you guys. Now, we know that Tesla stock, yes, it has been selling off pretty much since the end of July after getting rejected from this descending trend line, which, by the way, is a trend line that Tesla stock has been getting rejected from for the last 3 years pretty much. But of course, aside from the technical aspects of Tesla, we were seeing kind of this correctional move in the markets, the broader indexes, as well as this kind of diversification going on, which I shared within the Push and Profit private group, but publicly on YouTube just a couple of days ago, I made this video highlighting about a massive update for Tesla stock, and this was on August 4th where I talked about this. Now, you guys are free to, watch that video, but that video was made right around over here, right before the 5th, of course, but after the 2nd, and I mentioned how we were going to see a big drop for Tesla stock, and I wasn't going to buy until we essentially saw Tesla stock hit this area over here where we have a lot more volume relative to price. Why is that? Well, we know that when there's a lot more volume relative to price, that means that there's a lot more participating between the buyers and the sellers, and that's why you tend to have consolidation take place, and so that was ultimately going to create a floor for Tesla. Well, guess what? Tesla did indeed falling down, and we ended up having the next day push upwards. And so while a lot of market participants panic sold, I was within the Push and Profit private group sharing how that this was just a correctional move in the market, and that structurally, if you take a look at the broader markets, let's look at SPY. Yes, it was a big drop down. We had the Japanese carry trade, we had some global conflicts taking place, and just pretty much diversification from the Magnificent Seven that had a lot of concentration. But I said that structurally, the market was still pretty strong. I said that, one of the things we have to understand, and this is kind of taking it from the Dow theory, which is it's one of the tenets, it's the second tenet, which is that you have to understand the primary market, the primary trend, and the primary trend is still pretty strong. And so while a lot of people panic sold, I was saying, look, this is going to create a buying opportunity, and indeed it did, not only for the broader markets, but also for Tesla, where I mentioned I was going to be buying more shares. Again, feel free to check out the last few public videos. I share some of the topics that I talk about, but of course I go much more deeper within the Push and Profit private group. Now, I also shared this on YouTube over here. It was a little bit of a meme, but this is from JP Morgan stating that institutions bought the dip while retail panic sold aggressively. And so we have the stats here that retail sold $1 billion while institutions bought up $14 billion in this recent correction. And then I shared how don't let smart money shake you off, and I shared how this correction didn't change the primary trend for the markets. And if you guys again want to get access to the Push and Profit private group, feel free to check out this link. I'll put it in the comment section down below, and also will be in the description of this video. But what is the positive news that is also good news for Tesla? So we know that Tesla fell down, it bounced up over here. Okay, that's good from a technical perspective, but what about a macro perspective? Well, we know that the Japanese carry trade was kind of causing a bit of concern, not only for the Japanese market, which recently was plummeted, getting clobbered, but also for U.S. equities, because, and I don't want to delve into it because this can make this video much longer than it needs to be, but pretty much you had many market participants, investors from Japan, kind of doing this sort of arbitrage where they're borrowing at, with the yen falling down, and the rates that they have over there, and then buying U.S. treasuries. And then, of course, once you had the yen going up, that was causing a concern, and there was a lot of liquidation taking place. And again, this is a topic where, I could go in and spend a whole 10 minutes, but the main point that everyone wants to extract is, okay, well, we don't need to know the whole understanding of what's going on, but what recently changed? Well, what's pretty good is that we recently had the Bank of Japan, which, by the way, if you don't know, that's pretty much the central bank of Japan, just like we have the Federal Reserve. So they control monetary policy in Japan. They said that they won't raise rates when markets are unstable. And so ultimately, what they just recently announced, and this is pretty much Japan bailing out the markets. The Central Bank of Japan decided not to hike interest rates during this market instability, and they also mentioned that they believe that the U.S. economy has a high probability of achieving a soft landing, and they don't see any major changes in Japan and in the US economic fundamentals. And so this is pretty good news because, of course, a lot of the selling was contributed to the liquidation taking place from the market participants that were, from Japan. Because not only were they buying U.S. Treasuries, they were also buying equities. And so, when you had stocks kind of having a correction, and then you also have Japan, the yen going up, and then you also have interest rates for the Federal Reserve over here announcing that they're likely to cut in September. Well, that kind of causes this recipe for disaster. And if you understand, then you get it. But if you don't, all you have to know is that now we have some good news from Japan that they're not going to be hiking rates, and they're not going to go ahead and make any further decisions that could cause more liquidation within Japan. And so this provides kind of this positive outlook, of course, for the Japanese market, but also within just U.S. equities alone, right? And so that's why we take a look at SPY, the S&P 500, we see this green candle, right? And if you actually take a look at SPY from the peak recently to where it was at, it was slightly just under correctional territory, is 9.65%. Correction is technically 10%. So we didn't even go into correctional territory with the S&P 500, but we did for the NASDAQ Index ETF QQQ. In fact, if you measure it out from the top to the bottom, it was roughly a 15% drop. But now you go ahead and measure it from the top to where we recently closed, and it's still down 12%. But this is a huge bounce. I mean, that's 3 percentage points in just the last few trading sessions. And it looks like we may be heading out of this correctional, territory. And one of the things we have to understand is the markets were very frothy. If you get worried about the market falling down 15% after the market having an extremely positive 2024, then perhaps maybe you shouldn't really be investing. And I hate to say that. You shouldn't be trading. You shouldn't be investing if you're getting shooken out by drops like this. I know if you go on X.com, formerly known as Twitter, you see all the other YouTubers saying that the sky was falling, you'd get worried. But ultimately, look, a correction like this isn't bad, and especially when markets are pretty frothy, you kind of expect a correction. It's healthy for markets to pull back, but ultimately, the primary trend, right, just like the Dow theory suggests, it's the trend that you want to look at mainly, and it was still strong, right? I think too many market participants get shaken out when they're looking at the secondary trend or the short trend, right? So that's kind of like the day traders or the swing traders who are looking at a smaller time, aggregate period. When you look at just from here to here, yeah, you'll say, oh, the sky is falling, right? But when you kind of zoom out from a bigger picture, you'll see, okay, it's actually not so bad. So just a friendly reminder not to get shaken out when you have corrections, as they're healthy. You need to have corrections because otherwise you have prices trading at multiples that they shouldn't be trading at. And so you always want to go ahead and use these as opportunities to kind of take advantage with the discrepancy between price and value. But going back into Tesla, right? So I mentioned I was going to buy some more shares of Tesla. I was saying around, the mid 170s. We got close to 181 pretty much right around over here. So it didn't quite hit the 170s, but I mean, like a few cents away, or I'm sorry, a couple dollars away, and you're at the 170s, which isn't, something that's crazy for the Tesla to do. So I went ahead and I did indeed add more shares of Tesla in my long-term portfolio. Again, you should only trade and invest in whatever you see value. By the way, I always try to say this in my videos that just because I'm buying something in my long-term portfolio or I'm making a trade in my trading account, my short-term trading account, you shouldn't copy me. You should do whatever you see value. I just wanted to share my insights and kind of highlight how we talked about this both publicly in my previous YouTube video. So if you're not subscribed, consider subscribing. And also privately within the Push and Profit private group, we talked about how the market was structurally fairly sound. Now, we do have a couple of things that we want to be mindful of going into this week. Of course, the week is not over. We have consumer credit coming out at 3 p.m. Eastern Time, Wednesday, August 7th. So that's something that we want to be mindful of. Kind of see what's going on with, credit for consumers, because we know that recently there's still been a lot of reliance on credit. And so we want to go ahead and look into that. And that's not even counting the buy now, pay later story, which, again, that's a different story. But we also have that as well as some labor data. We have initial jobless claims. And then, of course, we have Richmond Fed President Tom Barkin speak. I don't pay attention to what all the Federal Reserve or the FOMC members say. Just a few of them, as we know that not all of them are voting members. So that's something you want to be mindful of. But again, we'll listen to what Tom Barkins has to say. But ultimately, we still have a couple things to look out for this week. Friday is going to be a bit of a slow day from a macro perspective. There's nothing going on. But that's okay, right? Because we're still in the midst of earnings season, right? We still have a lot of companies reporting earnings, so that's something that we're going to be mindful of. But I ultimately believe that right now we're in a period where we may very well see Tesla get close to that 217 area again, which is why I added more into my long-term portfolio. But with that said, just wanted to provide a quick update for you guys. If you haven't done so already, also make sure to check out the links in the description below, because we have a huge sale to join the Push and Profit private group. You could start for just $18 a month, and again, you could cancel at any time. So if you want to get access to my daily briefings, where every single day I share my overall insights on the market and what trade ideas I like. For example, I just recently shared a new trade idea yesterday. But again, I'm not going to share it publicly here. But if you guys want access to that, check out the links in the description below. I'll also pin it in the comment section. And with that said, hopefully you guys got some value from this video, and I'll see you guys on this next video right over here. Take care, guys.